Hello, my name's Jim Wade. I'm a tax attorney here in Maine, and welcome to the second installment about innocent spouse relief and when to request it. Another way to phrase it would be, how do you know if you may be someone who qualifies for innocent spouse relief? And that's what I intend to get to today. All right. So just as a quick refresher, innocent spouse relief is about severing a joint liability for you and a spouse or ex-spouse, or maybe you're separated. But the idea is that you have a joint tax liability and you are seeking to sever it, meaning you will no longer be liable for your spouse's or former spouse's tax debt. There are some requirements. So this first requirement is that you must have filed a valid joint 1040 tax return. And I say valid joint 1040 tax return because innocent spouse relief does not cover other types of taxes like payroll taxes or corporate taxes, just individual income tax, including self-employment, but it also only includes your joint tax debt. So if you file a joint tax return and let's say you married someone who has a tax debt from either a previous marriage or from when they were single, and the IRS seizes your tax refund, your joint tax refund, that is not innocent spouse relief. In our next episode, we're going to talk about what that is. That's called injured spouse relief. But for purposes of innocent spouse, you must have an individual income tax debt from a joint filed return. Now that debt, as I said earlier, must be a responsibility of both spouses, but it isn't just any old tax debt. There has to be some erroneous item that creates a tax liability, or there is an underpayment of taxes when the return is filed. And I'll go into erroneous items here in a moment, but underpayment of tax just means when the return is filed, the full tax balance is not paid. So there is an amount that you still owe. Now, there are three types of innocent spouse relief programs. You do not need to be divorced for 2 out of the 3 or separated. It's helpful, but you're not required to. The only one is separation of liability requires that you be divorced or separated. All right. So let's talk about erroneous items. And I thought the best way to do it is creating a fictitious couple called Jack and Diane. And by going through their return and what comes up, we can identify what are erroneous items. So erroneous items are things such as unreported income or an incorrect deduction, credit, or basis in an asset. Incorrect does not mean that it's false or fraudulent. It can just be a negligent, that you took something as a deduction or credit that shouldn't have been claimed and you made a mistake. So let's assume for 2021, Jack and Diane file a return together. What would be erroneous items on their return? So Jack is self-employed, and when he's doing his taxes, he decides he's not really interested in paying the total amount due. He didn't set aside money for paying taxes. He spent it on a new truck or tools for business. And so to get out of sort of the consequences of that, instead of paying estimates, he paid for other stuff. He decides, you know what I'm going to do? I'm going to inflate my auto expense so I'll owe less in taxes. That is an erroneous item. Diane, she herself, has $10,000 that she earned from gambling, and she leaves it off the return. That's unreported income. That is an erroneous item. We also have a situation where Jack and Diane, they claim their niece for a child tax credit, and they didn't qualify to claim her. Let's say they just made a mistake, thought they met the qualifications, turns out they don't. That's an erroneous item. And finally, I put this last example in there to kind of go to the incorrectness versus fraudulent. Let's say Jack claims $4,000 for tools, but they aren't for his business, they are for his woodworking hobby. That is an erroneous item. Let's say he really wasn't paying attention, put it on the return as part of his tools expense, and forgot that he had an invoice and it was for his woodworking and not for his business. Again, erroneous item. I did forget when I put this slide together that basis in an asset is also an erroneous item. So an example of that would be, let's say Jack has a truck he purchased for $10,000 and he instead claims that he paid $20,000 so he could get a larger depreciation deduction. That would also be an erroneous item. So why it was important to point out what these are is, merely having a balance due or not getting as much taxes back as you want, like in a form of a refund, that isn't necessarily something that qualifies for innocent spouse relief. There must be something on the return that generates that liability. And as we'll discuss in later, discussions about what qualifies for innocent spouse relief, there must be an erroneous item that is your, former spouse or spouse's, responsibility. We will talk about equitable relief, where there is an exception for where you might be able to get some relief for your own taxes, but generally it's got to be something related to the other spouse. And while there are situations where you can get relief for not paying it enough to cover your full tax liability, generally when we're talking about innocent spouse relief, this is where someone is going to need relief from the tax debt because of some erroneous item that was put on the return by the other spouse. All right, so that is all I have for today. I hope you found that helpful and give you an idea what you need to look for if you think you may qualify for innocent spouse relief. Remember, it's you trying to get relief from a joint tax debt for you and a former spouse or spouse, maybe even separated spouse. It's not relief from a liability that is just of your spouse. All right, contact us if you have questions. Thank you very much.